Good evening, peoples. Wild, wild day in the markets on Thursday, taking us into Friday. Let's see what is happening. So, the IAUI, the NEOS gold ETF, high yield income. I don't know how high it's going to be. We shall see. I'm going to walk you through what all it does, how it traded today, what it's holding, and just how this thing works, and sort of review the NEOS funds. Some of you know them, some of you don't. Obviously, silver was breaking out today. I bought JNUG, which is a 2x on GDXJ, the juniors. You have more silver producers and silver explorers in that fund, mostly producers. And that was up big. It did pull back some. I'm still ahead of where I bought, but I was a little disappointed that silver got into 36.20, closed around 35.80, but that's up substantially, and it does appear it's breaking out because that gold to silver ratio is going to drop below 100 and go a lot lower. So silver stock should outperform. That's why I don't just buy GDX right now. I think GDXJ is a better play. Although when I see runs happening, I like to be in the 2x for a couple of weeks swing trade. All right. So IAUI is now launched. Okay, let's just review NEOS for a minute. So again, they're a pretty good firm. You either know them sort of now or you don't. I think they do some good things. So SPY and QQQI are probably their best known funds. And those have the dividend yields as such. Their Bitcoin is also popular with you guys because you've asked me to add it to my analysis on the Bitcoin income ETFs, the BITOs. Though I can't even think of the rest of the names right now, guys. Um, but we have that list, and I include that. There's YBit and YieldMax, and there's several of those. They also have an IWMI, and that does look like that's showing some strength in the IWM, the Russell 2000. Although you guys sensed what I was talking about, that I have a gut feel we're topping, and that may appear by next week. Um, so, all right, let's jump into this. This is the other 11 funds, and you can see the dividend yield expense ratio. So where do we come in here with Mr. IAUI? Launched on the 5th of June. They always target most of their funds at $50. It closed at 49.88. It will have the same distribution schedule as all of the other NEOS funds that pay, and especially those that pay monthly. So let's see what they say. Rather than take you to the website, I take the website to you. I just take some images and snapshot them. So they're saying the fund aims to offer monthly income through a data-driven call option strategy on gold ETPs. The fund seeks to offer appreciation based on exposure to physical gold. I'll go through this in detail, guys. The fund offers an accessible way to pair physical gold exposure with high monthly income potential within a single ETF. Well, you defined high definition or high yield. Okay. So they are going to be doing the following. Okay. So I'm going to take a look at their holdings, but the strategy already is defined, and then I'm going to show it to you. So those of you who are familiar with me reporting on the YieldMax various funds over the last year, now I'm doing Coney and PLTY. Boy, did Palantir get hit there with a 7% decline. I expect that to bounce back. They're just, if you own Tesla, it was worse, right? Or Tesla and any of the income funds, it was down 13% with a war of words with Elon Musk and Trump. I kind of side with Elon only in the sense that I think the government is spending too much money. You build Doge to find all of this fraud, abuse, etc., and you cut budgets. And then, in order to get a bill passed, our government, whether you have a majority or not, these politicians all want to enrich themselves, either side of the House, Republican, and especially some of the Republicans. So nothing comes out the way it should. I tell you, the only way out of this is term limits. You just get people in there, they have a real job. If there's a lawyer, like 70% of all our congressmen are lawyers. Stick to your day job, go in for 4 years, do your job. What if you're a senator at 6 years, and go back to your career? We don't need career politicians. That's my thoughts on all this stuff. I think Trump's just savvy enough to understand that I think he wants to do the right thing. I just don't think they can get it done. I mean, you can drain the swamp, but you can't drain it in 3 months or 1 month or any period of time. And it's sad for the average American because we pay for all that. All right, enough of my political rant, guys. At least I'm not trying to give you one side or the other. And I hate those that just hate on the other side. All right. So when you look at the holdings, I describe this. What is a synthetic? Well, a synthetic is the way to do things where you're long an asset. Okay. So in this case, they want to be long gold. So you buy a call and you sell a put. Both of those actions are bullish bets. So if that's all you had, you wouldn't really have income until the 4, 5, 6 weeks out. Like they bought 7 18s. Let me show you down here. This is actually the synthetic. So they take 24 contracts. Each contract is 100 shares. So they have $20,952 on buying the call. Well, we don't know the price, right? I'd need to know the intraday that they did. This is the closing prices. So GLD is, I forget, State Street, I think. So they own, whoever issues and owns the GLD. So GLD is supposed to be backed by physical gold. And I think JP Morgan has that contract to store the physical gold to back up GLD, just like you have SLV for silver. But I've never liked that approach. It's kind of like Fort Knox. You start to wonder if JP Morgan and these other banksters aren't sometimes leasing it out to somebody else and letting them to borrow, and they pay a lease rate, and yet it's supposed to be right there for all the people that are buying GLD. So, I mean, as long as they manipulate and get away with it, but having been a understanding gold for some 20 years and trading it and able to retire in the 2000s decade, I know a fair bit about this. And then the paper manipulation on silver has been really bad, and I think the comeuppance on that is coming um, to fruition. All right, so you create a synthetic, not unlike Max and some of the other funds are doing, although the new move is sort of into swap. So you buy a call, you sell a put when you're around the money. I'd have to actually pull up GLD and tell you what kind of price it's at. Let's do that. Because I don't buy it and I don't follow it, but I understand. Okay, so it's 309.33, down $1.57, and it was as high as 312 because gold was up pretty good, then down some, so down 0.5%. So they've gone out, and what happens in these situations is you can win or lose. So on having a synthetic as long as gold's moving up, and I'm very bullish on gold. It doesn't mean it can't run up 20% and pull back 10, and while it's pulling back 10%, it's half of the 20% move up. You're always going to get those fluctuations. So the synthetic allows them to gain as much as gold can gain. Then you come along and you sell these two call positions here. So this call for 24 shares expires on 7/18. The put, you sell puts, which is also bullish, and you hope what you're really saying is gold needs to be by 7/18 above 311. I don't think that's a problem, or at least during that period of time. It could be at some point if it pulls back, but that's pretty conservative. The other way to actually make the income along the way, although now they're paying monthly, so these are out to 7/18. They're about 6 weeks out. So they'll close these to generate some income. I don't think this is going to be a super high yielding. It really depends on where we are in the goal. I see 4,500 if this war breaks out more in Europe and the Russia thing doesn't get solved, and Iran and Israel and the US being drug into it stays hot. We could see 6,000 gold. That's probably 12 to 18 months away, but before my target's been 4,500 regardless because of the debt. So, having said that, guys, they sell these calls. This is where you can get run by, right? That's the classic scenario of selling sort of a naked call. They say it's covered. And then what they also do is they go buy Goldman Sachs. I just put G and S. I didn't want to make my column bigger so you could see it. So Goldman Sachs physical gold ETF. This is sort of like a custody. If you have gold and you want to go store it, you can send it to Goldman Sachs. But the idea is they have a bunch of gold. And so when you buy shares of that at that price, this is what you have. So they'll get some appreciation on that. If gold moves up, they'll get appreciation on the 24, and they'll add to that as people buy in this fund. These are small positions because the way these ETFs launch is they fund it or they borrow money from somebody. And then as the assets under management people buy into the fund, then they have the cash. So the only thing that will keep this from being high yield is gold is a store of value and it moves up. But let's say it moves up 10 or 15% a year, which is pretty awesome for gold, reflecting what the dollar goes down on and the debt. But if we have this outbreak and it flies, then these guys can get hurt over here unless they move to a spread capability. I'm going to have to see in the prospectus if they can end up putting the insurance, like buying a higher price call. They're selling at an 18 and they're selling a 24. The 24 gives them a lot of room, right? Because we're at 309. But just looking at the chart over here on GLD, I mean, it was a low point was about 275, and then a high point in April was over 315. So just in the month of April alone, from a low to high, you had say a 275 to 318. So that's 25. That's like a 43-point move. Now, more so, we've been in a trading range. In May, we had a high of 315 and a low of 290 something ish. So you have to be so the end of this thing this isn't showing me, well, the synthetic will capture the upside, but what'll happen here, let's say this thing ran in the next 5 days, 40 points. And we ran up to, 309. All of a sudden, we were 349 because gold just took off. There was economic unrest and geopolitical unrest and more bombs and so forth, and new people coming in. Then what happens is you have a negative here because you're only covered to 318 and 324, and that's all the way out. So you would then eat up 70 or 80% of what you gained, right? What they did do, they only wrote, and this isn't common knowledge for a lot of people, but I learned it on YieldMax. And then some of the new funds that are offering options, they're only writing options on half of their position. So in this case, they sold 22, okay, versus their synthetic of 24. So they're up at about 22, 24. So they're like 90%. They're selling calls against their position. Now they do own this, and this is big. But this is where you physically, the reason they use the options and they have to, this is FYI for you guys. An ETF, by definition, can't be a single security. So you're calling this gold. You're limited to 25% of your investment monies. So where's all their money? Where's 74.26? Actually 76% is in US Treasury bills and in cash. So they meet what their requirement. So as more money comes in, they'll put more contracts, but they'll always keep this below that 25%. And that includes owning this physical and in the contracts. So the beauty of the synthetic is you buy the call and you sell the put, right? So that keeps your cash even further down. Right now, you're seeing like $1.50 higher. So when they put this on today, I don't know if they're going to show their intraday trades like I do for, I doubt it, but I can look at this and see what they did. So sorry, guys, I didn't want to go on and on, but I think you should know what you're owning. So my gut right now, if I go back here, it's not listed in my list because I did it before it launched when I was talking about it. Eh, this thing could be a 10 to 25 or 30% yielder. And the upside would be they write those calls out a little further and gold moves. But if it gets blown by, their synthetic is still going to get some of the gain. But remember when I talked to you about Neomax and I say, hey, the problem when they sold naked calls before they moved to spreads, on the bad times, they could only get 30% of the gain of the underlying. So that's what will happen here. Think of it like that. They're going to get 30 to 33% when gold blasts, right, up. And it's very vulnerable to do that the rest of this year. I don't know exactly when. A lot of it is the geopolitical events that trigger. It's a fear trade, guys. People own it because it's a store of value. The same thing that digital gold and BTC is talking about. All right, guys, that's what I got for you. 0.78 also. Let me make sure I didn't leave anything out up here. Oh, what is happening here? It's moving my picture. All right, that's not a big deal. So, launch on the 5th, expense ratio 0.78, closed at 49.88. It will be using these as the payday. Will we get something on June 24th? I doubt it. Possible. Somebody that maybe knows what happened on other fund launch, but clearly we would have a payout on 725 with a X declaration date of 722 and an X div of 723. There were more dates, guys. You can go on the website and see them. I just didn't put them all in here. Okay, let me let you go. This is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a great evening, guys. Bye for now.